What's up everyone, Tom here with another video. Today we'll be talking about the latest stock market news for the week ahead, as well as our technical analysis levels for the S&P 500 and Nasdaq. We've just seen the stock market reach an all-time high, but did it do so on the right context and the right volume? We're talking about that and more because I think there's some critical things to be looking at stock markets around the world this week. Stay tuned. So as we like to do on this channel, let's take the complicated and try to simplify it together. One of the ways that we can simplify the stock market down is by discussing what's been happening in the stock market over the last week. And it's clear to me when we look at a heat map that we're seeing a generalized trend. And that trend is that we are going back into tech stocks and we're going back into what's now considered the new defensive during this crisis. So Apple was one of the standouts from last week, and so was Nvidia. And both of these stocks are very popular with retail traders. And I think you're going to start to see a bit of a trend that I would be looking at in the stock markets right now throughout this video. Why is that? Well, whatever we're doing is in the retail traders are doing, Wall Street always likes to prey on us eventually. And we are seeing some pretty big moves in Tesla, Apple, Nvidia, and a few other stocks. Will these PEs be justified? We're soon to find out, but Apple is just about to reach $500 and the two stocks coming up with the stock split are of course moving the heaviest. But let's talk about the stock market quickly. Let's talk about this S&P 500 before we go into fear and greed in the market. So right now we're seeing 33.96 everyone. That's right, an all-time high, but on top of that, a monthly R2 pivot. We mentioned this last week and we were talking about the monthly R2 pivot and how the market likes to gravitate towards that, and then usually it finds some form of resistance at that level. So when we go through the top-down approach a little bit later, we'll be breaking down this level and talking about the 33.96, but it's interesting that the market closed right on that level moving into next week. Let's talk about fear and greed as well. So what are we seeing in fear and greed? Well, a lot of people would say the market's really greedy, but we do know that the market likes to look ahead in terms of rebound in the economy, and that the Federal Reserve and the fiscal stimulus around the world have plugged a lot of the problems, at least so far, due to this crisis. I'm sure there's going to be other problems moving forward, and we haven't foreseen those yet, and neither maybe has the stock market. But right now, the stock market has just ticked over into greed. And what does this mean? Well, there's all these different factors that go into these greed indexes, but one of the ones I like to look at is put and call options. So right now we're seeing it pretty low, and we have been seeing it relatively low for a while. Why is this important? Well, actually options expiry just occurred in the US. So the 21st of August was the last day, of course, of options expiring, and now we've got a new option set. So of course, any puts that were open have most likely now expired worthless for the month of August. This means that now we're looking at a new month and potentially not as much open interest. So maybe this is the time when the market does that dip we were talking about, getting back into the moving averages. Couple other things on these fear indexes. Of course, we've got market momentum, safe haven demand, stock price breadth, all of these things. But really, if you bring them all together, this is quite a good little indicator that's happened over time. So we're seeing a very big rise in, of course, greed. And we're not in that extreme greed level, but we're certainly at highs that would have me worried about risk reward in the market right now. It's really a market where you want to think about dollar cost averaging and potentially investing, and then thinking about having a little bit of money behind in the future for potential new investments that you could be looking at. So what happened last week? Well, we talked about in some of the videos that we covered where we thought the Nasdaq could theoretically reach that kind of 11,500 take profit that we talked about, the technical take profit between 11.5 and 11.6, and it did so while the S&P 500 barely squeaked out a new high. And it becomes, of course, apparent when we look at that heat map and we see what happened with Apple, we see what happened with Nvidia, we see what happened with these companies that all moved very heavily while the rest of the sectors were not moving as strongly. So here we've got the US 100, we've got the weekly chart here, and we can talk about all the closes. It was an incredibly strong close. We've got 11,560 plus close. And on a monthly, of course, when we go down and do the top analysis, it seems like it's very, very far away from that 20 moving average. And we talk about how the market likes to come down. So we're either going to see a bit of a sideways consolidation at some point soon, or we are going to see a dip. Because that's the reality. The market must come down at some point to these moving averages. Now, I'm not talking about the monthly generally. I like to usually use the weekly, and we're still very far away from that. So the weekly's now gone up to 10,100, and we're sitting at 11,560 plus, so quite far away. Why I want to bring up the Nasdaq is not so much to talk about where it could go next, as of course we've already hit the technical take profit zone of the channel. So it's technically reached its high, and at the same time, Apple has almost reached that $500. So things are starting to sync up. But more when you look at other stock markets around the world, ones that don't have as much tech stock in them. One of the great examples is, of course, the ASX 200 or the FTSE 100. So the FTSE 100, look at these candles. I mean, does this weekly look really great to anyone over there? A lot of people will push out and they'll say, oh, look, it's a pin bar, it's a shooting star. Absolutely. We're seeing extreme weakness actually around the world in major stock markets. So the FTSE, which does not have those tech stocks in it, it's got a lot of financials, a lot of energy, a lot of those types of things, is not performing well. And we're sitting back at that kind of 6,000 with a bearish candle last week on the close and a little bit of bearish sentiment coming in now. So if we get below these points down here, you could definitely think that the FTSE is in for some problems in the short-term future. Now, why is this important? Well, if you're a bear in the markets, obviously it's very hard to short the Nasdaq, but it's certainly not as difficult to go around the world and to find other index opportunities out there for your types of sentiment, because you might be right, but as the Fed underpin the market and the hysteria in, of course, the US tech stocks continues, it is a very difficult and very dangerous market to short. So I just wanted to point out that other stock markets around the world are not necessarily going as well as we might think. So what about the two big candidates? Well, if you were to have two charts that I would look at every day, I would be doing the analysis on them every day, it would probably be Apple and Tesla. And why is this? Well, I think these really underpin the current sentiment in the market, at least from the retail side and the current hype and hysteria. If we see failures in these two stocks, I think that really shows us that sentiment's changing, which is very important in the markets, and that we should be paying attention to dip buying levels. And obviously, if you want to look at shorts, look at shorts. Why is this? Well, because Apple and Tesla are both hitting not only all-time highs, but they're going ballistic. Tesla now is so large that it is bigger than, of course, Toyota, bigger than other companies with Toyota. Apple is $2 trillion. So we have just hit $1 trillion, literally 12 to 18 months ago, and now we're hitting $2 trillion on the world's largest company. So Apple is out of control, and it is just about to reach that $500 mark. Look at that, stops just before, like we always talk about, and then starts selling off. This was a key technical kind of level that I was thinking about just from a pure psychological standpoint. Remember, if you're ever taking profit, never consider taking profit generally at the exact round number. You want to take it just before. And this is just because usually with markets, they'll go up, they'll kind of tap a level, and then they'll sell off that level. And that's because of the nature of retailers, the nature of where people put their orders. And if it does bust through 500 and do it easily, it'll actually go to the next 50 zone or 100 zone generally. That's what they like to do. So right now, Apple is certainly pretty damn crazy. It's very, very far away from that weekly 20 moving average, as we can see here, incredibly far up. And I just wanted to point out, I would have both of these on the charts to look for blow-offs. And how do we spot a blow-off? Well, we just look at gold, really. It's going to teach us the way of looking at blow-offs. Realistically, gold went very heavily up. It went too fast, too quick, similar to what we possibly are seeing on Apple and Tesla. And then it sold off very aggressively. Remember, we talk about that 10 to 15% off generally in one day kind of sell-off. If that ever happens, then that usually states a blow-off. And when a blow-off happens, we start to get consolidation in a range. It always works around the same way. The same way as what gold happens will be what happens with those stocks. So we'll see a sell-off followed by a decent recovery into a fib level like we talked about. Those fib levels are very important. So you always want to think about a 78.6 and a 61.8 fib. And then when the market comes back into these zones, it usually sells off again and sometimes comes and touches the range or just starts ranging in the middle. So we are still in the blow off on gold for this week. We're still in that volatile times. There will be opportunities. There might be, buying opportunities above here and selling opportunities below there. I wouldn't go into the full analysis in this video, but this is the type of thing that you'd be looking for in the stock markets. A big sell-off followed by a big pickup, of course, Apple and Tesla, and then usually a second kind of dip occurring due to the nature of these events. So let's now talk about our top-down analysis on the S&P 500. Well, it all starts on the monthly in the top-down. We obviously want to talk about what's going on right now. And I guess it's pretty clear that we're right up there in terms of the resistance, a slight new high on the S&P 500, and nothing much else to note other than it's back to where it was pre-crisis. When we go down to the weekly, really the same thing from last week becomes apparent to me, and that is that yes, we've closed relatively strong in terms of the weekly. We closed on the high, but I think really the most important two things are that we had lower volume than usual during this period, and that of course we're still very far away from that 20 exponential moving average. And we've mentioned this several times. If we zoom out and go over on time and we look at big bullish aggressive runs on the S&P 500, it likes to come back to these 20s. And if it does go too far, it comes down aggressively. So I'd always think, because those things always reoccur in the markets. There'll always be a dip, there'll always be potential. So of course, what would we do together? Well, we'd be drawing up some support resistance lines for where we think the market could come down to. And we've talked about this 3200 this week that's possible, and that's between the 3230 and the 3200. We've got a range of these wicks and then the bodies below here on the weekly. So I'd definitely be drawing that up straight away and then going into the daily timeframes. Now, what's happening with the daily? Well, the daily sold off a little bit last week, went down to that 3350, bought back up, and we're now at the high. So that's important because we could be seeing a double top formation that could happen this week. So we'll talk about that in the 4 hour. I think that's probably the best time frame. But again, lower than average volumes, still far away from the 20. It's been a decent run up without hitting the 20 on the daily. And we'd be starting to draw two different concepts here. One of the concepts is we see a bullish movement next week, followed by usually a bearish movement down where it hits the previous resistance and that becomes support. And then usually a bit of a pull up. And of course, the next point would be it could continue to do the normal technical analysis up to the 3600. That's definitely a possibility and definitely something that could happen. Now, we could put a whole bunch of indicators on this chart, and I'm sure there's going to be divergences, and we're going to see MACD divergences and RSI divergences and stochastic. But really, price action is going to be the number one indicator that you should be looking at. And we don't want to focus too much on those other indicators as they've already proven themselves to be quite wrong during this print up. Of course, when we've got the Fed really counteracting, we need Wall Street, we need the price action and the volume to push it down. The indicators are not going to be enough. So use them more as tools to help you with your process than anything else right now. I really firmly believe that's very, very important. So we've got that 3200, 3230. We obviously have where this 20 moving average is here right now. And if we did see it come down, that would be the 3333. So I still think that 3300, the 00 level, is a possibility in a sell-off over the next couple of weeks. Let's go down to the 4 hour though and talk about what we're seeing here. So here we may actually bring on an indicator. Let's bring on the MT4 MACD. And this is one of the ones that we use on this channel together quite a lot. And why do we use this? Well, it's one of those ones that I like this kind of histogram way of doing things. I like it for divergence. And when we go into smaller time frames, it'll make even more sense. So let's go to the 1 hour and see what's happening there. And you'll notice straight away, we do have divergence here on the MACD. And you're always going to usually when you've got a sell-off followed by a decently aggressive pickup, you're always going to have that MACD divergence. So we've got our class B divergence here where we've got equal highs. And then of course, we've got a lower MACD histogram. But what I'll be looking at this week is really the double top formation. Can we sell off straight away on Monday? Sell off, break through the previous lows here at this 3360, come back, then lightning bolt down, and all of that would be signifying a decent little short into previous zones, so into at least the 3300 kind of zone. Then we take the range of course, this move, as you do with double tops, and that would be kind of the level that you'd be looking at. Same thing on the 1 hour chart here for the buy. If it breaks through here, then it would come back down, test previous resistance, which would become support. And then usually we'd see that kind of bullish momentum. So we're at a critical point in the markets, and you don't always reach critical points, but we've definitely been here for the last week. We've kind of been hovering around this zone, and I'd like to see either this level or this level get fairly cracked and then pulled back on. I think this is the time where you wait And you be like a praying mantis. You wait on that leaf and then you click the button when it does one of the two things it is going to do. Staying in this range, you get chopped up a lot. And remember, the longer it coils in this range, the stronger the move either up or down will be. So I think the S&P 500 definitely is presenting decent opportunities moving forward. And I think they could be on the smaller timeframes for now. But of course, as the smaller timeframes move in a direction, they'll start to print on the bigger timeframes. And when they print on the bigger timeframes, we could be interested. So what are we seeing on the markets for the week ahead in terms of economic news? Well, there's not too much coming out other than some new home sales, Case-Shiller National Home Price Index, those kind of things. And of course, we're seeing the continuing jobless claims, GDP revisions, and some other basic data. So we've got PMI, etc. Now, all of this information together will be important for sentiment next week. But I think really at the moment, we're just looking at a market that is slowly coming up, and really it is one sector still doing it, and that is the tech sector. I'd be more interested in looking at the other indices around the world, such as the ASX 200, FTSE, Euro, all of those types of things. And when we see those start to topple over, we know there's something very wrong in the US market as well. So good luck everybody this week. If you enjoyed this video, please remember to subscribe and of course hit that alert button. And we'll see you this week on Monday for a live stream pre-market bell. Stay safe, happy trading, bye for now.